Question is C 4.3. Following information relates to a firm. Current ratio is given. Working capital is given. If current ratio is given, working capital is given, we know we can find out current assets and current liabilities. Inventory turnover ratio is given based on COGS. GP margin is given, sales is given. You are required to find out value of opening stock, presuming that the closing stock is 40,000 more than opening stock. The value of bank overdraft and other current liabilities are in the ratio of 2:1. So let us first start with current ratio. Current ratio is 1.5 is equal to current assets divided by current liability. Simultaneously, let us take net working capital is equal to current assets minus current liability. Net working capital is 2,85,000. Current assets minus, can I say, current asset is nothing but 1.5 current liability. 1.5 current liability is equal to current assets. So instead of current assets, I can always write down 1.5 current liability minus current liability. 2,85,000 is equal to 0.5 current liability. So current liability will be is equal to 2,85,000 divided by 0.5, 5,70,000. Is current liability, and they are also saying in current liability bank overdraft and other current liability ratio is 2:1. So 2:1, 2 is bank overdraft and 1 is other current liability. We can divide 5,70,000 divided by 3, 1,90,000 multiplied by 2, 3,80,000. We have got other current liabilities and bank overdraft. Opening stock, presuming that the closing stock is 40,000 more. Before that, let us take this ratio, which is inventory turnover ratio based upon COGS. Inventory turnover ratio based upon, in any turnover ratio, denominator is this, average inventory. On numerator, we write down sales, but here it is specifically told it is based upon COGS. So numerator is COGS. What will be COGS? We can easily find out because sales is given and GP ratio is given. So sales 40 lakhs minus GP 20% will be 30, will be COGS. COGS is 32 lakhs. Inventory turnover ratio is 8. I will be getting answer of average inventory. Average inventory is 4 lakh rupees. We need to find out opening stock, presuming that the closing stock is 40,000 more than opening stock. So closing stock is higher. Can I write down? Opening plus 40,000 is equal to closing. Because closing is 40,000 more, if I want to equalize them, closing I am writing it on right hand side. Opening is 40,000 less. So I need to add 40,000 in opening stock to write down this equal to sign. What is average inventory? Average inventory is opening plus closing divided by 2 is equal to 4 lakhs. Instead of closing, I can write down opening plus 40,000 divided by 2 is equal to 4 lakh rupees. 2 opening is equal to 8 lakh minus 40,000 is 7 lakh 60,000. So opening will be is equal to 3,80,000 rupees. If opening is 3,80,000 rupees, 3,80,000 plus 40,000 is equal to closing stock, which will be 4,20,000 rupees, will be nothing but closing stock. I've got all the answers: opening stock, closing stock, other current liabilities, bank overdraft. This was C 4.3.